Shall we start?
Yes, please. Shall I? Okay.
Sir, give us a minute, please. Give. Yeah. Sir, we are on live now. You can start your proceedings.
Okay. Good morning, everyone. I warmly welcome you to the 33rd Annual General Meeting of Igarashi Motors India Limited. The meeting is being conducted through the video conference in compliance with the applicable circulars issued by Ministry of Corporate Affairs. I'll now introduce the directors who are attending the meeting. I am Hemant Terulkar, attending from my residence at Mumbai. And let me now acknowledge the presence of our esteemed board members and promoters. Mr. Keiichi Igarashi, President Igarashi Motors, and Mr. Wakabayashi are attending from Japan. And also Mr. Haruo Igarashi, Director, is attending from Tokyo, Japan. Mr. L. Ramkumar, Independent Director, attending from his and Chairman Audit Committee, is attending from his residence at Chennai. Mrs. S. M. Vinodini, Independent Women Director and member of Audit Committee and Chairperson of Stakeholders Relationship Committee, is attending from her residence in Chennai. Mr. Thomas McHugh, a Director, is attending from Chicago, USA. Mr. R. Chandrasekharan, Managing Director, is attending from the registered office in Chennai. So is Mr. Dinakara Babu, Company Secretary, from our office at Chennai. Mr. A. S. Viveka Chandranath, CFO, is attending from our office in Chennai. In addition, we have Mr. P. Govindaraju, Chief Operating Officer, also attending from our registered office in Chennai. Mr. Praveen Kumar Jain, Secretary, Statutory Auditors, BSR and Company, and C. Prabhakar, Partner, BP and Associate, Secretarial Auditor and Scrutinizer for e-voting, and Ms. Sophia and Cameo Corporate Services, Register and Transfer Agent, have also joined the meeting. We have requisite forum present through the video conference to conduct the proceedings of this meeting. Participation of members through video conference is being reckoned for the purpose of quorum as per the circular issued by MCA and Section 103 of the Companies Act 2013. With the quorum being present, I call the meeting to order. I now request Mr. Dinakara Babu, Company Secretary, to provide general instruction to the members regarding participation in the meeting. Thank you. Mr. Babu, please.
Thank you, sir. Good morning, everyone. Members may note that this AGM is being held through video conference in accordance with the circulars issued by MCA and SEBI. Facility for joining this meeting through video conference is made available to the members on a first-come, first-served basis. The Register of Directors, Register of Contacts, and other registers required under the Companies Act have been made available electronically for inspection by the members during the AGM. As the AGM is being held through video conference, The facility for appointment of proxies by members is not applicable, and hence the proxy register for inspection is not available. Members are requested to refer to the instructions given in the notice for a seamless participation through video conference. The AGM webcasting link has already been placed at the company's website. Now I hand over back to the chairman.
Thank you, Babu. The company has taken all the feasible efforts to enable members to participate through video conference and electronic voting at the AGM. I thank all the members, colleagues of the board, auditors and the management team for joining this meeting over video conference. It gives me a great pleasure once again to welcome you all to the 33rd Annual General Meeting of Igarashi Motors India Limited. During the financial year 24-25, our company demonstrated agility and strategic foresight and in a complex global environment. Despite headwinds such as tariff changes, geopolitical tensions, and supply chain shifts, we achieved profitable growth, expanded our customer base, and our commitment to the sustainability and operational excellence. I would like to thank all the employees and the management team, and of course my colleagues on the board for such an excellent performance. The global automotive industry, which is our main customer, faced challenges due to shifting trade policies and geopolitical developments. Nonetheless, demand remains resilient all over. In India particularly, the sector continued its upward trajectory, supported by strong domestic demand, favorable policies, and increased localization. We delivered a strong performance with 16% revenue growth, driven by robust demand across geographies and new product introductions. Profit after tax rose by 153%, reflecting improvements in operational efficiency, backward integration, and our continued focus on new product development and solutions. We successfully launched programs such as electric parking brake, trunk opening closing device, and onboarded major Korean OEMs. We also expanded into new areas like seat motors, gearbox actuators, and park lock actuators. The global move towards supply chain diversification offers us a unique opportunity. OEM and Tier 1 are actively seeking resilient, cost-effective manufacturing partners. Our India-based capabilities position us well to serve the demand with high-quality actuators and motor solutions. Coming to future growth priorities, we are focusing on strengthening our presence and collaborating with over 12 Tier 1 customers to develop over 25 engine air management programs, targeting 27 million motors in the next 3 to 4 years. Additionally, over 15 programs in safety and body systems with an expected output of 45 million motors are under development with global and Indian partners. Regarding ESG, we have a continuous focus on responsible manufacturing, energy efficiency, and stakeholder welfare. Our ESG roadmap includes increasing green energy adoption, resource optimization, and expanding CSR efforts. We remain fully committed and firmly committed to deepening customer trust and driving sustainable growth. I sincerely thank all our valued shareholders for their continued confidence and steadfast support. I also would like to thank once again the management and all the employees for the outstanding achievement. My best wishes to all of you. Thank you. Regarding the notice of the meeting, already this notice has been circulated and I take the notice convening the meeting as read. Before we proceed, I am pleased to bring to your notice that the company has provided you all the facility to cast your vote electronically on all resolutions put forth in the notice. Members may please note that there will be no voting by showing of hands. We now take the resolution as set forth in the notice. We will open the floor for questions by members after all resolutions are tabled. Following are the businesses to be transacted in the meeting. Ordinary business resolution number 1. To receive, consider and adopt audited financial statements for the financial year ending 31st March 2025 and the report of the Board of Directors and Auditors report. Ordinary resolution. Number 2. Approval of payment of dividend of rupees 250, rupees 2.50 per equity share for the year 24-25, again ordinary resolution. And appointment of Mr. Hemant Nerurkar, Director number 00265887, who retires by rotation and being eligible seeks reappointment. Again ordinary. Item number 4. Approval for the material related party transactions with Igarashi Electric Works Japan operational transaction. Ordinary resolution. To approve payment of remuneration to Mr. R. Chandrasekharan, Managing Director, for a period of 2 years from October 25 to September 27. Special resolution. Reappointment of Mr. L. Kumar, DIN number 000900089 as Independent Director. Special resolution. Appointment of Secretarial Auditor for 5 financial years starting 25-26 to 29-30. Ordinary resolution. To approve payment of remuneration to non-executive directors. Special resolution. Ratification of remuneration paid to BY and Associates Cost Auditors for the year 25-26. Ordinary. The auditor's report is not required to be read as there are no qualifications or comments or special observations. Secretarial audit report is not required to be read as there are no qualifications, comments or observations. Shareholder queries on the company accounts and businesses are invited now. I now request Mr. Dinakara Babu, Company Secretary, to provide general instructions to the members regarding question and answers, and Mr. R. Chandrasekharan, Managing Director, to respond to the queries at the end of the questions. Thank you. Mr. Dinakara Babu.
Thank you, sir. Dear shareholders, before we go live with the Q&A, here are some points for your convenience. Kindly turn on your video when you are projected on the broadcast screen. Kindly unmute yourself and proceed to ask the questions. Please mention your name and the location from where you are joining. Each shareholder will have 3 minutes for their questions. Once you have asked your questions, you can log off and continue to watch the proceedings. To avoid a repetition, all the questions will be replied at the end. The company has received requests from few members to register them as speakers at the meeting. Moderator will unmute the respective shareholders. Now, we request Mr. V. Rangan, DPID IN 300441, client ID 10237-300, to unmute yourself and kindly proceed with the question. Rangan, sir.
Mr. Rangan, you can unmute and speak.
Rangan, sir, can you hear us? Rangan, sir.
Mr. Rangan.
Hello. Are you able to
Yes, sir,
hear me?
we can hear you.
Huh?
Yeah, morning, sir. Please ask your question.
See, actually, before testing, actually, you should test the speaker one day before that, actually, sir. It's causing really confusion, actually, whether you're there till, because in the time also has been lapsed 10 o'clock. After that, you should just start it, no? Because we wonder whether we are there or not, actually. Please, in future, whoever given us as speakers, please test it before that. Some companies do that. Okay.
Okay.
Then regarding this current this one turnover, you have increased by 13%. No doubt, a very impressive balance sheet, and you have sustained that. But as a shareholder, I feel your market capitalization last year, this time it was about 711 rupees, and is only 534 something as of today. That speaks because as a shareholder, I would like to see that our company market capitalization should be increased. So market knows something which I do not know that, but you may know that. So I would like to know, ponder over the issue. What are the reasons for that? That is most important, because you, and no doubt you are technically very sound, because as I see that that EPB safety application, and you have done that. So what is that actually benefit we are going to get actually in the future years, and how many tier 1 company and tier 2 companies are there? How much is the current year increase in the gross block, and how is the VLDC business going? But what is the capacity of the motors you have? Now you said about 15 programs you are going to do that, and what will be the likely orders you are going to get it in this thing? And no doubt I congratulate for the raw material, you have contained the raw material cost. And what about the tariff that now, how we are going to be affected? Can you briefly? Now, what are the reasons for the turnover coming down? If you see the last quarter also, it has a little increase, but last quarter 30 June it has come down, and profitability has also come down by 1/3. What are the reasons? No doubt, because it is a continuous process. I think our company doing a better job. I don't doubt anything that, but I would like to know what is your long term, because your market capitalization is more than 2,000 crores, and our turnover is only 800 crores. When you are going to cross the 1,000 crores this year, definitely will be hope I will be doing that. Thank you very much. Thanks.
Thank you. Thank you, sir. Now we request the next shareholder, Mr. Vinod Kumar Wari, DPID IN 300-757, client ID 10846476, to unmute yourself and kindly proceed with the question, sir. Vinod Kumar, sir.
Yes. Mr. Vinod, please unmute and speak.
Vinod Kumar, sir, you have to unmute and speak.
Mr. Vinod, sir. So we are not getting a response, so we can move to next speaker.
Okay. Now we request Mr. Abhishek J, DPID IN 301-637, client ID 41-359-155. Sir, kindly
Mr.
unmute
Abhishek.
yourself and proceed with the question.
Mr. Abhishek.
Abhishek, sir. You have to unmute and speak. Abhishek, sir.
He is connected, but he is not unmuting. Mr. Abhishek.
Okay, you proceed, and then we'll come back to him.
Okay. Now we have a question coming in from the next shareholder, Mr. Divesh Janwar, DPID IN 301-983, client ID 11217369. So Divesh, sir,
Yes.
can you please ask your question?
Mr. Devesh.
Sir, please unmute and speak.
I'm Devesh Jawar. I'm speaking from Indore. There are certain questions I would ask the management. First, congratulations on good revenue growth. And my questions are: what is the current level of capacity utilization across the, and is the company also looking into opportunities into expanding in drone segment, as BLDC motors are used there as well? And actually, from the annual report and some data online, I read that we have close to 25% market share in the Indian BLDC ceiling fans market. So I would like to understand what percentage of that is Chinese imports, what percentage of industry is Chinese imports, and how we are addressing that issue. Are we also communicating with the regulators for anti-dumping duties and provisions? And please throw some light on BLDC motors for EV 3V that we have mentioned in annual report. And also, I've seen Igarashi Motors is very good at corporate governance and shareholder interaction. But I would love if company could give some quarterly press releases or investor presentations so that investors can be in loop with company's growth and future prospects. Thank you. That's all from my side. And congratulations.
Thank you, sir. Now we have a question coming in from the next shareholder, Mr. Pritesh Talakshi Chadda, DPID IN 300-513, client ID 23521-093. Pritesh, sir, can you go ahead with your question?
Mr. Pritesh, you can
You have to unmute and speak.
Yeah, can you hear me now?
Yes,
Yes, sir.
yes.
Yes, sir.
Okay, perfect. So my first question is, what is the total motors volume in FY24 and FY25? My second question is, what is the update on supplies of EPB and TOCD programs? And what will be the annual full-scale volumes on this EPB and TOCD combined? My third question is, when you mention these programs of 25 million motors and 45 million motors in your conversations, so what do we have to understand from it? Do we have to understand a certain annual volume number will eventually materialize? Because in the past there were many these programs that Igarashi had, but none of it fructified or the volume scale up was slow. So if you could tell us what we have to understand from this statement. 3 years from now, what is the volume that one should look at, combined volume, CAM plus TAM for Igarashi? My fifth question is there any impact from the rare earth or metal supply and any impact on the production? My sixth question is the ongoing trade war. Does it provide an opportunity for Igarashi, or do you see a case for a disruption, considering that more than 70% of your business is exports? And my last question is any progress with the largest passenger car manufacturer in India, because they tend to import a lot of these motors. Thank you, and these were my questions.
Thank you, sir. A few shareholders have submitted their queries in advance, requesting responses during the AGM. I read one by one. The shareholder name Kush Nahar, beneficiary account number 120-454-000-003-0771. First question, how do we see the industry growth panning out in the next 3 to 5 years, domestically and globally, since 55% of our revenues are export driven? Second question, do we see any impact in our planned production initiating from the OEM in terms of delay or postponement of launches or production schedule due to the rare earth magnet issues in India? How are we mitigating it? And third question, do we expect some benefits from the recent USA and Japan 15% tariff deal? Fourth question, can you elaborate on how we see the electronic side of the automotive industry and what products or solutions we are targeting to offer? Fifth question, what % of raw material do we have to import? Any disruptions in the supply chain faced in the recent past or experiences? How are you resolving these issues? Sixth question, what kind of capex we are envisaging over the next 3 to 5 years in rupee terms? Seventh question, do we face any customer concentration risk? What is the contribution from top 1 top 5 and top 10 customers in FY25. And eighth question, all exports are in dollar terms, or do we engage in hedging different currencies? Ninth question, what is the typical cycle time for the new product development from approval, testing, and launching? 10th question, what is the vision of the management? What kind of absolute revenue or CAGR growth we are targeting for the next 3 to 5 years? I move on to next shareholder.
Does he also have 10 questions?
Yes, sir.
Okay.
Vinod Kumar Ori, DPID 120-692 000 004 0972. First question, while you are trying to sustain growth and expanding horizons, which is also the theme of the annual report, does this mean you are witnessing only volume growth, but there is no scope for value growth or any other further upstick in the managing margins profile? Approximately what sort of volume growth you are anticipating in FY26? Question number 2, the company has graduated from ETC in engine air management into EGR, WGA, VTG, and CCV, and ETV two-wheeler applications. Please share some more details on the demand, acceptance, and future outlook of these products. There have been a decrease in dependency on ETC, where contribution has come down from 90% to 75%. In such situation, where are you seeing in the next round of growth coming from? Next question, what kind of demand and acceptance has the next generation TOCD launched in late 2024 garnered? What kind of revenue potential does it have? Are the 6 application programs expected to enter commercialization in FY26 itself? Please share your experience, both good and bad, in Korean market. What are the key learnings in the last 6 to 8 quarters? Who will benefit us going forward? Next question, which are the new domains, automotive aesthetics and FMCG, where we are currently not present and can take a larger impact on the volumes, sales growth going forward in the next 8 to 12 quarters? Can you please elaborate on the order book visibility in months, quarters? What is the frequency at which client shares the order book? Next question is, do you think Igarashi will be 1,500 crore top line company by FY30 or earlier? Since the last you grow by 15% and the year before that by 10.5%, can we factor that FY26 can be a grow by 20% over FY25? And next question is, in FY19 to FY21, we have achieved a EBITDA margin of 15.8, average of 3 years. Do you think we can sustainably reach 15% EBITDA margins in the next 8 quarters? What is the scope for reducing the other expenses in P&L statement? What is the average cash conversion cycle for us? What percentage of revenues come as advanced payments? And coming to next question, electric parking brake, which has the 3 programs for which company has started a series production in FY25. What is the status of 12 new programs that company is engaged in? And can you please elaborate a bit in the same? What is your take on the impact from tariffs for the industry, if any, and the company? Are we prepared to pass on the prices to the customers? What are the current discussions? Please share on the as on date. And the last shareholder we have got Abhishek, DPID, IN 301-637, client ID 413-591-55. Where you see the light in the end of the tunnel, what will be the growth figures in the first half and second half? Please give the production capacity utilization figures in percentage for FY25, and what was the capacity utilization in the next year and last 5 years on average, moving average basis? What are the cost cutting initiatives and production enhancement activity done by the management? Next question, what is the view of the management going forward? Sustainability of the profit and in growth. Next question, what are the management efforts to improve working capital cycle, ROCE, EBITDA multiple, debtor days, and interest coverage ratio? Please provide us the details relating to other current and non-current liabilities. What are the management efforts to reduce other expenses? What is the policy related to dividend in our company, as most of senior citizens only depend on that? Where do you see the industry next 3 years, and where our company will be placed in the industry as other players are more proactive and prudent? Sir, with this, we have completed the questions. Now I hand over back to Mr. Chandrasekhar to reply shareholders' queries.
Yeah, good morning, members. I would like to take the questions by summarizing on the business verticals of our company. I will first start with the automotive actuator vertical, which contributes close to 54% of the overall revenue of the company. In automotive actuators, we have 3 platforms. One actuator application predominantly for engine air management. And then we started last year SOP with actuators for safety systems. And current year we would be doing an SOP for the body systems as well. Now, if you are very much aware that 2019 our predominant applications were ETC in the air management, and we have diversified it to EGR, WGA, CCV, and two-wheeler EV applications, and also some tractor applications under the engine air management. And we have now close to 15% global share in the engine air management actuator program, and 43% market share in the domestic market. Engine air management, where our program team currently is engaged with 25 programs on 12 Tier 1 customers worldwide, with a cumulative volume of 27 million. Approximately the business value would be 67 million that would accrue to us, which are all awarded to us, which would fall in the next 5 years. Getting to safety systems, this is a sunrise platform for us, and this is very neutral to both ICE as well as BE vehicles. And we have predominantly got the major share from the Korean Tier 1 customers, and we are working on right now on close to with 7 customers globally and 10 programs with a volume opportunity of 48 million in the next 5 years, transacting to 130 million US dollar business, which is all either most of it is awarded, and balance is all more of a repeat program for a different locations. And coming to body systems, our program team is actively engaged with 4 programs now with 4 Tier 1 customers with a cumulative volume of 18 million already awarded, with a business value of $47 million to accrue in the next 4 years. Now, with this automotive actuator business program, we have overall in the next 4 to 5 years the business opportunity of $244 million, and then I take it to the sub-assembly platforms for the automotive section. In sub-assemblies, we do sub-assemblies for window lift application, wiper application, and then we do for fuel pump application predominantly. And we have, and it's a stable business contributing 28% revenue share of our company. And WLM, we have close to market share of 40% today, and we are targeting in the next 3 years that we would cross 50% here. And our program team is engaged over 5 programs with the Tier 1 customers with a cumulative business opportunity of 12 million units with a business value of $16 million in the next 5 years. And in terms of fuel pump, carrier, molded stator, and armature sub-assemblies, our program team have now engaged on 9 new programs with the Tier 1 customers with a cumulative volume of 20 million units with a business value of 27 million in the next 5 years. Seat assembly is another area where we have the traction is building up. We do motor assembly and brush molders assembly for the seat applications, and our team is actively engaged on 4 new programs with Tier 1 customers with a cumulative business opportunity volume of 32 million units with a business value of $60 million in the next 5 years. With this, the automotive business opportunity we have in the next on actuators, we have $244 million, and sub-assemblies, we have $103 million as an opportunity cumulatively for the next 4 to 5 years. And getting to BLDC, we have populated so far 5 million BLDC solution to Indian ceiling fan market with a market share of 22%. We have retained the 22% market share. The current slowdown in the business is due to extended off-season we experienced in FY25, coupled with postponement of the B20 norms by Government of India from December 24 to January 26. We envisage the growth tractions in the business in the coming years as Government of India is committed to energy efficiency norms to other applications like TPW, pumps, and other consumer durables. Our BLDC solutions are already in compliance with the new BEE 2.0 rating norms yet to be notified by the Government of India. We have also proactively designed competitive PCB controllers for TPW fans poised for launch with this anticipated mandatory star rating. The current BLDC solutions for ceiling fan is rapidly evolving in India due to local manufacturing scalability and government BEE star labeling support and consumer shift towards energy efficient product. The BLD solution offered by our players in the organized market are either designed in-house or outsourced to manufacturers like ourselves. The components used in these solutions are predominantly imported from China, Taiwan, and US, and we expect the incentive push from the government under the EMS scheme would make the Indian electronic components very self-reliant. We are also looking at diversifying our ESDM diversification opportunity. We are leveraging our electronic foundation. We are exploring growth in automotive PCBs for TOCD, and we are also seeing a nice opportunity in throttle position sensor covers, where our engineering team is currently under discussion for the domestic market. It's most likely that we are in advanced stages right now, and we expect some good news to be announced in the next AGM. Getting to profitability question. FY25, we had done a operating profit of 11.5%, okay, over 10.2% in FY24. Your company has already launched PERIO programs to enhance people potential, target cost savings in material sourcing, improve productivity and quality of deliverables through automation and improving operational efficiency. In FY25, our gross contribution realization improved by over 1%, and we expect the savings to continue in FY26 as well. With the robust growth in the new programs and higher economies of scale, we expect steady operating margin over 14 to 15% by FY27. Currently, as you may be aware, that the company has started business with a lot of new programs, basically in safety and body systems, and we are trying to build in the efficiency and operational efficiency in these programs. And naturally, it takes a little bit of time for us to get those targeted efficiency when you start these programs, because the people have to get used to those productivity norms with the new programs. And our team is consistently working on that. And we assure you that our profitability will be definitely better than last year, this year. And going forward, now we would be getting into the run rate of 14 and 15% in operation profit in the coming years. And there was a question regarding capacity utilization platform-wise. In actuator motors, we did 54% capacity utilization. This way, I was 50% in FY24. And sub-assembly, we did 68% against 46% in FY24. And BLDC, we utilized 57% as against 58% in FY24. And these percentages of capacity utilizations are likely to touch over 70% in the year FY27, with the new programs taking up on the volumes. And regarding ROCE, there was a question. Yes, we understand the patients. This is primarily because the company has diversified the product portfolio, and wherever we were able to utilize the existing line capacity, the company is very focused on converting those lines for new programs. But there are certain specific instances where we need to go and invest on these new programs, and that is increasing the the capital employed. And we expect the normalcy on our programs will be achieved in the year FY27 with more 14% ROCE in FY27, with the capacity utilizations catching up. Regarding capex, what was it that we did so we did capex of 70 crores in the year FY25. That was predominantly for the new programs like safety, and then we did some sub-assemblies for fuel pumps, and line addition for and some new conversion of the new line for the EPD programs is what we have spent, other than the maintenance capex. And current year also, with the volumes coming up on the safety systems from our customers, we are looking forward to invest additional lines, and this would require a capex of close to 70 to 80 crores in the current year as well. And there were some questions regarding operation cycles. We are already cognizant of that. Now our operation cycle in March 24 was 87, and now in March 25 we have come to 82, and in June 25 we have come to 79. Our target is to move towards 60, and we have a clear program by which we would be focusing on how do I improve my operation cycle on the working capital. Regarding operational efficiency due to backward integration, yes, the company has a backward integration strategy by establishing precision parts, press parts, mold parts, and drawn parts, and sub-assemblies and motors for manufacturing units within the radius of 500 meters from our main plant. And all these components are used for in-house consumption for the purpose of controlling the scalability, quality, and cost efficiency for meeting the global customer demands, I would say. And there were certain financial questions on non-current liabilities. Non-current liabilities predominantly have deferred tax liability, which is 19 crores, and borrowing, long-term borrowing is only 10 crores against 19 crores of last year. And we have lease liabilities for our leases for our factories, because we are situated in a SEZ. We have factories in government land, so we have 16 crores of lease liability against 21 crores last year. On current liabilities, predominantly it represents advance from customers, statutory dues, contract liabilities, and refund liabilities, which are of routine business in nature. On contingent liabilities, the FY25 represent capital commitment of 16 crores, and we have income tax liability of 4.5 crores. This is primarily for one of the FY23 cases for transfer pricing and assessment questions, and these are all with commissioner appeals, and we are confident that these would be taken care. And regarding dividend, now we have a clearly announced policy that 1/3 of the revenue of the PAT would be distributed as dividend. And there are questions on the trade war tariff between what the US has announced, with the is a company impacted. It is very premature to talk, but still I can give you a considered view. We are our exports to US is close to 27% or 27 to 28% of our revenue. And all the running programs today, we export to Mexico, and then it goes to the North American market, Mexican market, and North American market. Currently, the tariff that has been announced in India is not impacting the current revenue. However, we do have some new programs and forward programs which are coming in the coming years, where we are directly shipping to US ports. There, we are of the view that there will be some discussion point between the governments where the 50% would go down, or we would be definitely be competitive to China in terms of the duty. That is where we need to see, because most of the programs are replacement of Chinese suppliers. So we expect our competitiveness to be intact, and and we will be sure to to have the business going as far as this is concerned. And there was a question from Abhishek regarding employees. Yes, we have close to 786 employees, direct employees, with respect to Igarashi, and of which 72% of the workforce is female employees, and we have taken 85 employees during the last year, and we have given we have given a salary increase to our employees, and there was no salary cut that that we have done. And there was a question from Mr. Ori regarding the Korean business. So the Korean business was successfully launched now in 2023. October 2023 was the first discussion we had, and we were able to rapidly achieve the milestone of the SOP in 9 months. Now for the EPB actuator program for one of the Tier 1 customers in Korea, and now we have close to 7 customers with 10 programs and with a business volume of 48 million, which has been awarded in the next 5 years. So this is going to be a very sunrise platform, both for the Indian, Korean Tier 1 customers, as well as Korean customers, and some of their global locations as well. And I wish to assure you that this platform is going to definitely bring in more revenue in the coming years. And some questions on the new program validation cycle. Generally, it takes 12 to 18 months for, as far as the automotive market and non-automotive market. For BLDC, it takes around 4 to 6 months. And Korea has been fast, and we were able to do it in 9 months. And there was a question on drones. Are we interested in drone? Interestingly, yes. We had a couple of months back, we had one program has been thrown to us for the drone motors. And now the engineering people have shared the technical data, and we have also shared the commercial code with the program, and the customers are quite happy. This has been done with the collaboration with R&D of our Igarashi Japan headquarters, and the technical discussion is on, and we would know about the progress now in the coming years. The challenge would be more to do with the rare earth magnets, because drone BLDC requires a rare earth magnets. Today we have some restriction from China, but by the time these programs comes into serial production or SOP stage, we believe all these situations would get eased out. And there was a question on industrial growth planning 3 to 5 years, sir. I think we have detailed the industry growth covered in our management discussions in our annual report. Now we will have a copy sent to you in case we have not received it. Now that has been covered in detail, sir. Is there a problem with the ferrite magnets? Sir, most of our motors, actual motors, use non-magnetized ferrite magnets in our motors, so there is no supply chain issues. And we are also developing sourcings from Vietnam as well. And we have also taken up most of the components to be sourced from India. So local sourcing is also predominantly for the commodities like steel and copper, which we used to import. We have already strategizing our steel imports from from nil to more than 20% last year. So, and we are targeting to cross 40% this year for localized steel sourcing. Then do you face any customer concentration risk, sir? Today, we don't have any such customer with concentration risk because we have taken a strategic direction here and we have diversified not only the market as well as the customers, and no customer exposure is more than 25% as of now. And regarding dollar, do you hedge? Yes, we make our imports as well as exports in dollar terms, and we have a hedging policy, laid out hedging policy, which have been in use for more than a decade right now. And now we have, we take positions on net foreign exchange, where 75% of the current net foreign exchange exposure would be covered, and 50% of next year and 25% of the year after next. We generally have a view and cover the net foreign exchange exposure based on our midterm business plans. I think I have answered all the questions that have been received by us, and we would be very happy to take in any questions that would come in. We would ensure that we give you a return reply as well. Thank you so much. I hand over to back to the chairman.
Thank you, Chandra, for answering most of the queries so well. And as suggested by Mr. Chandra, please send, in case you have further queries, please send them to Mr. Company Secretary and we will suitably deal with them. As per the provisions of the Companies Act 2013, the company has provided e-voting facilities to its members through CDSL e-voting platform for transacting the business contained in the notice, which commenced on August 5th, 2025 at 9 a.m. and ended on August 7th, 2025 at 5 p.m. Members holding shares as on July 31st, 2025, which was the cutoff date for the eligibility to vote, but have not cast their vote electronically, are requested to cast their vote through CDSL e-voting platform, which is available on your screen. The voting process will now be activated and will be available for voting for next 30 minutes. The Board of Directors have appointed Mr. C. Prabhakar, Partner BP and Associates, Company Secretaries, as scrutinizers to supervise the e-voting process. The resolution as set forth in the notice shall deem to be passed subject to receipt of number of votes. Further, I hereby authorize Dinakara Babu, Company Secretary, to declare the results of the voting and place the results on the website of the company and also inform stock exchange at the earliest. The e-voting results along with the report of the scrutinizer will be uploaded on the website of the company and CDSL website. I would like to now thank all of you for attending this meeting. I hereby declare that the proceedings of the 33rd AGM of the company shall stand concluded upon the closure of e-voting of the AGM. We sincerely appreciate your continued support and active participation. Thank you once again we look forward to seeing you again in the next general body meeting. Thank you. We close the meeting now, except for the voting. Thank you.
Thank you, sir.
Thank you, Chairman. Thank you, Babu. And thank you, everybody.
Thank you.
Thank you. With the permission of Chairperson, we are concluding this meeting. Thank you all for joining. Good day.
Thank you.
Thank you, sir.
Sir, can I end the meeting?